Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about the latest on Trump versus Powell and on Trump's Godzilla tariffs. Logan, welcome back to the podcast.
It is wonderful to be here from sunny Florida and had the White Lotus shirt. You know, we came and spoke at an event. Everyone loved it, of course. The Nerd Tour is very popular, by the way, everyone. And another crazy week.
It has been a crazy week. So we are here in person. So we're doing this in person, which is interesting. And we met some fans on the first night that talked about how they loved watching this on YouTube. And I was like, really? They're like, no, that's how they like it. They like to see the facial expressions. So
yes, if you guys really like to enjoy how you just shut down trolling people, come to the YouTube page and watch me challenge all the trolling men out there to live debates. And they all, no, I don't want to. So.
Okay, yes, that's a good thing. Okay, so as you just alluded to, we have so much going on. It feels like it's hard to keep up, especially if there are multiple things in a day that Trump says it might change. Things about tariffs. So let's start at the top. What do you feel like is happening right now?
So the question is, did Trump fold on China and Powell? And the markets, it's another crazy week. You know, we're thinking, no, we're going to go full blown Godzilla tariffs. He's going to fire Powell we're not going to fire Powell. And we might be a little bit less stringent to China. The reality is that China's not letting them play bully ball on them. And it didn't even look like there was any negotiation. And the clock is ticking. And this is the problem with trade wars in America. We have a 2-year political cycle where China doesn't. And we decided to start a world trade war with everybody and our allies. And Japan came out this morning and said, listen, we're pushing back here because China is a big trade partner of ours. So what's the deal? And what's happening is now time is taking its course. And now everyone gets to see what happens with trade wars, right? It's not so much the first base inflationary effects. It's now we're going to have supply shortages in a few months because the whole function of the global markets are now being put on disarray. So we see this in freight data. We see this in trucking data. Last night, the Atlanta Fed's business inflation expectations just shot up vertically, which Fed President Bostic must love. This morning, Thursday morning, Fed President Waller comes out and goes, hey, listen, I'm going to try to look through that inflation because if the labor market starts to break, we're going to cut rates, because jobs are at risk. So you've got a lot of things. But the question is, did Trump fold, or is he just trying to find a way to kind of get out of the Godzilla tariffs, which, by the way, Peter Navarro did this. All of you can blame Peter Navarro. He went Godzilla tariffs, try to do bully ball, but with everyone. And when you try to do it on everyone, you better have a pack or something to where you could get a deal done. And now it's like in limbo. So whatever positive things you see in the markets, it's because deals are going to be made.
Right. I think one of the new variables is that maybe the Trump administration didn't expect China to go back to their trading partners and be like, don't make some good deal that's bad for us because, who do you want more? And I think in Japan, they specifically talked about that.
Yeah, it's, it is an interesting tactic to go after allies and neighbors and big trading partners and then go Godzilla tariffs times 3 on China, then come back and say, hey, by the way, everyone, let's work together against China. And it's just time. Right? Time. And then it's the whole Peter Navarro left the office. Come on, let's go in there and get Trump to do the 90-day reprieve. So it just seems a little kind of Mickey Mouse at this stage. But the question now is, what if the courts say the tariffs are illegal? That's an out for Trump if he wants one. What if Republicans say, hey, listen, we're going to get slaughtered in the midterms if this keeps going. So get a deal done, or we're going to have to get a veto-proof kind of to take tariffs back. We're starting to get into that stage to where the markets are up today. The 10-year yield is down to 431. Stocks are up. We had a very interesting day in the markets where the 10-year yield fell over overnight news, but then Trump and Bissett said something. So we're very headline driven right now. But that 435 level, people, go look at that 435 level on the 10-year yield. If everything is constant, there was no Godzilla tariffs or anything, we work off of economic data, that's kind of where we should be. So we're just hovering around this area until we start to get hard data that starts to go negative.
When does the hard data come in versus what we're seeing on like what you call the soft data, surveys, things like that?
So here we are today. Jobless claims came out, 222,000, still very low. New home sales beat estimates. Just always remember, if you look at the new home sales the last few years, whenever rates go down, picks up a little bit, rates go up, picks down. I mean, we're just basically hovering in a very small range, going nowhere for years now. Existing home sales expected month-to-month declines, but still over 4 million. So that data line looks good. Durable goods order, super big, right? People are front-loading tariffs. So the hard data will start to appear probably in July and August. More noticeably, it is interesting because we have so many data line sets of people trying to get ahead of tariffs. So remember, bullwhip effect in economics. It's going to be very, very hard. Again, COVID was the ultimate bullwhip effects on data, but we're starting to see how we could see sharp reversals in certain things that are very tariff related. But the surveys are getting weaker. The hard data, labor data, still firm. We always focus on new home sales with the economic cycles because of residential construction workers. It beat estimates, but it really has not done anything for years. So if there was no tariffs,
right.
Hypothetical. Now there's a debate. Where would the 10-year yield be? Where would mortgage? Because the Fed was like, hey, listen, we're almost at neutral. We don't know if we want to. So. But the 435, if you guys if let's take Godzilla tariffs or tariffs away from the equation, look at the economic data, look at the 10-year yield. On the headline, it looks pretty normal, but it's now going out. So this is a marketers to me, the markets still believe there's going to be a deal. If there isn't a deal, then there's a lot more downside on stocks. There's a lot more downside on corporate earnings if that can happen. Companies are withdrawing guidance for the year. Or some of them are going, okay, this is if we get a normal environment, and this is what will happen if we get full-blown trade war. So we're getting to the stage where you're going to have to pick your side because time is starting to take its course. And I think it's not so much that Trump folded with China. He just can't do bully ball and get something done because the Chinese apparently weren't really talking. I know this morning Trump said, oh, we talked to China this morning and stuff. So it gets into a little bit more interesting, but this week has been very good for seeing how the market reacts. To me, the market acts better when there's trade deals and the market acts worse. But 3 different times we've seen 3 different reversals on the 10-year yield to the upside, which I know is what the White House doesn't want on kind of talking tough on trade. So we'll see. I mean, again, it's going to be the weekend soon. What happens on Sunday night? We always go Sunday night tweets and how that reacts. But clearly, President Trump went on TV and said, I don't intend to fire Powell now.
Okay, so this was a big deal. We've, of course, been talking about this for a couple of weeks. You've written different articles. We've had several podcasts about it. So from your perspective, what does that do? That was intended to stabilize things, calm things down so that, everyone felt like, hey, I'm not about to mess with the reserve currency of the world.
What did Q say to James Bond?
I don't know.
Never let him see you bleed and always have an escape plan. And I think threatening Powell at that point, it kind of showed your cards, right? We're all playing poker here, right? We're all playing poker against the trade war. When you're that aggressive, listen, Trump's going to talk down everyone. Right. That's not abnormal, right? If you want to sit there and talk about you should have rate cuts, fine. But when you're starting to threaten firing now, and Kevin Warsh, who Trump wants to replace Powell, is saying, oh, homie, don't do it, man. Don't do it.
It's a bad idea.
Don't do that. Just listen. And Powell's going to leave next year anyway. You and I have talked about this. Like, how would I handle this?
How would you handle this?
If you told me, first of all, I don't believe in this whole trade war concept. Going back to December 16th, actually December 16th, 2016. I think I wrote that article about this whole process. But if you told me what you got to figure out a way to do this, I would have waited. I would have waited until I got my tax cuts implanted. I would have, if you want to get rid of income taxes, I would have waited to that, because hypothetical, the Republicans like to do this. Lower taxes, so make it harder to raise them. Oh, let's get rid of it all. 150K and under, no taxes. Tariff will replace it. We joked about this, is that how wealthy we were from 1870 to 1913. The 52 years was the life expectancy back then. There was no Social Security, Medicaid, Medicare, or anything back then. The whole world has changed. That's why we do not like to talk about economics pre-World War II, especially pre-1933 also. So whatever you want to do with tariffs, see if you could get it done. Let Warsh come in, take Powell's spot, then go after it. This is what happened in 2016, 2017. He set the backdrop up for better, but going in aggressively and doing tariff on, tariff off,
right.
Then everybody calls your bluff. And then we said he's got to do something. We can't sit here for 4 years and doing that meme for the next few years. And now it feels like they're kind of stuck here. So It's not so much, I think, folded. It's maybe change the tactics in this. And this is the problem with trade wars. They're not easy, as you can see.
Okay, so if you're in housing, you're saying out there, what is going on? So we're already seeing some stories. We're looking into it. At what point do people who want to buy homes, for different reasons, uncertainty is not great for any market, in my opinion. We see this in different parts, but even when it comes to the housing market, uncertainty is not great. You would say, listen, he would say, we know this, that if you're ready to buy a house, you buy a house. You might not buy a second house right now. You might not be using if you're in Silicon Valley, your 401k that's tanked, you might not be using that to, help your down payment or whatever it is. Your investments, not your 401k. So there is a lot of uncertainty. At what point do you think this is hitting the housing market yet? At what point does that happen?
The 10-year yield matters more than confidence.
Okay. I know.
I've looked at the data for decades, and the rate variable, and I'm, again, another premise here. We have now had a few months of tariff headlines. We're going to get, the next stage of hard data hitting us. But I promise you, if the 10-year yield fell 1%, mortgage rates are 5%. Since we're working at the lowest levels of sales ever, COVID was a great example. Right. Y'all want to talk about a crazy period. Literally, people thought, am I going to die?
Yeah.
And
a lot of people did die.
And for those that don't remember, April 7th, 2020, I always ask everybody when I do these nerd tours, were you hoarding toilet paper? What were you doing on April 7th?
Yeah, I was probably, hunkered down at home. Definitely.
Yeah. Okay. So COVID-19 recovery model saying that it's going to recover, but it's going to recover fast, because as soon as behavior changes, because that was a stopping of behavior. Right. That was the Titanic Godzilla of, we all stopped doing everything.
Right.
And then it's we're still alive. Mortgage rates are at 3%. So millions and millions of people buy homes every single year, regardless of what happens. They did it in 2008. They did it in COVID. They did it in 2023. They did it in 2024. So what's the constant data right now? Because the 10-year yield fell this year, we see the new home sales purchase application data up 14% month to month, 5% year over year. Purchase application data still, even with this week, even with the reversal and higher rates, still up 6%. Confidence to me, withdrawing means a bigger pullback. We should be down 20%. Being down 20% on purchase application is very acceptable when you see very negative shocks. That would be normal. But we're just hovering around the lowest levels. We always joke that at every event. The last time purchase application data was this low, no doubt, was the top band, Gangster Paradise. No joke, go back to the 1990s. Do you know my hair in the 1990s, how it was?
Wow.
I had blonde hair. I had bald head. I had Wild Thing. I did that haircut in the movie.
I don't know what that haircut is.
The baseball movie. God, I forget. But you guys will understand. Vaughn comes in. throws a 100-mile fastball, almost kills everyone, had the lines in here. So 1990s had its own little vibe. But that's where purchase application, we have a lot more people now, right? A lot more households. So it doesn't take much to move the needle. But so far this year, the one variable that's different is the 10-year yield fell this year. Last year, the 10-year yield rose in January. So if you want to see the equilibrium difference in the data, to me, it's just that. But if we have authentic fear and everything pullbacks,
you'll see it in there.
Okay. I mean, shooting down lower.
So let me ask you this then. Obviously, you've said a couple of things like, this happens, that's inflationary, that's not good for rates. What do you think? Is there any way to even say what rates are going to do in the short term because things are changing so fast every time there's a White House announcement?
So there's two theories on this. Okay. The 10-year yield has to go higher because inflation expectations are going higher right now. Okay, that's a perfectly acceptable theory. That's not really happening. The Fed funds rate, 65 to 75% of where the 10-year yield can range within an economic cycle is Fed policy. You go back decades, you could see this. The forecast this year, 10-year yield, 470 to 380. We move off of economic data. Economic data has been getting softer. This is with the trade war headlines. We haven't seen the hard data break, right? Jobless claims has a break. Residential construction workers haven't lost their jobs. So if that data gets weaker, Christopher Waller, Fed president today, said, I am going to cut rates fast. By the way, he's auditioning for the job, right? Forget Kevin Warsh. Waller and Bowman, they're both auditioning for the job. They're saying labor over inflation. Yes, and they're making it public too. So guess who's going to love that? Oh, I want that guy. I want that lady as my Fed president. This is what I want to hear. So it's not coincidence that this is all happening now. But to me, again, if the labor data starts to break and the Fed has told us, written, that these are one-time price-offs, but they can be inflationary, be persistent, it's hard for me not to see them cutting. And then if they cut just 1%, it's easier to get to 6% at that. And remember, it's a labor market's breaking. There are things that, the government could do to stabilize the economy if they want to do that or not. But it gets more interesting when jobless claims starts to go up.
So from your perspective, the prospect of having lower rates really rests on the Fed, not where the bond market might go right now.
The bond market has tried to break the Fed a few times. Gandalf, for most of you, remember we said labor market isn't breaking. We got to hold the line, right? You're not going to, you shall not pass. Reversed. Hodor twice. Don't you dare tell y'all. Don't say it. Don't. Okay. That in itself held the line twice now. We actually broke it. The only time we broke that 380 line is when we had 3 really bad job reports. But that was last year. The 10-year yield went lower last year, reversed. Here, the labor data is not breaking. We just assume things might get worse, or the markets are going, they're going to do a deal. See, the markets to me are basically kind of saying they'll eventually do a deal. Nobody really believes we're going to have this protracted long tariffs are going to stay here forever, and we're going to change the economy. If they did, the whole thing would be different. But we have political cycles here, and there's a lot of griping already. Wait until there's stuff not on shelves, and you have to pay higher prices and all. Guys, you get the vibe here, right? Trade wars are not easy. If you want to do bully ball and make deals quick, okay. But the clock is ticking here. We always said he's got a window, because if the labor data breaks, it's just harder. It's harder to do these things when jobless claims are rising.
And you've also said, of all of the partners or all the people that you do trade with, China's one of the hardest because they're a dictatorship. They do not have midterm elections coming up. Their cycle is much longer. And, they're taking this opportunity to see what deals they can make and how they can strengthen their trade partners. So they don't really, they can wait it out.
The talk this morning was that the Chinese are going to just see, because they don't need to rush anything. Mark Carney from Canada basically said the old relationships with America is over after what Trump said. I don't even know what he said, but I'm sure he probably said something about raising tariffs even more. It's difficult, it gets more challenging. And why? Because Peter Navarro is doing this. Because Peter Navarro, this has Peter Navarro all over him. You're forcing bully ball. And if people don't play, it gets a little bit more difficult. If you're trying to do deals, like we're sitting here talking here, assuming that they're going to do a deal at some point. What if they don't?
What if they don't?
What, guys, think about this. What if there's no deals made for 2 years? What's it going to look like? There's going to be a lot more chaos. So this is why this week I thought there's a lot of people who say Trump folded his cards. A lot of conservatives are mad about that because it's like, why do we even go through all this? But remember, this has Peter Navarro written all over it. And this is why they had to run into the White House when he left the room. This is what we're doing. Oh, Peter Navarro's gone. Let's go get, hey, Trump, tweet this, right? Put this on social media. We'll do a 90-day. The markets don't like it. And they have to make sure no. Right. No, we don't make world policy because one guy leaves the room. Okay. So we'll wait for the weekend. We'll have another podcast to talk about other stuff. But this week was interesting in the sense that him flipping on Powell and then talking a little bit less, but you gotta deliver something. You know, the tariff on, tariff off was one thing, but
I think, we've talked to a lot of people at this event. It's been a great event. And we talked to some lenders, and generally speaking, the people we talked to were people who were supportive of like, hey, we think these are not bad things, like the immigration. That's not a bad thing. The tariffs. Okay. It's the execution that people are feeling very uncertain about. And also kind of like, can we do it better so that it's not so disruptive to markets? Because that doesn't help anyone, even if they support the underlying issue.
You could all see why they want the 10-year yield low.
Yes.
Because if you remember playbook number one, Trump waited 2 years. He waited 2 years, got his tax cuts, got everything, then went into a trade war tap dance, very light version of it. And it caused chaos back then. Now it's like, as we talked about from start, November 7th, 2024. This is not the best backdrop to do something like this. Right. So you got to be a little bit more careful. So we'll see. We'll see what later today brings, what tomorrow brings, what the weekend brings. But there is a slight kind of sea change right now in the mindset that he folded. But there's nothing until you see things signed. And Vance is now. The movie was Major League. Rick Vaughn. Yes. I had his haircut. I did the whole line things, but now I joke that they brought Vance in and I did a gif of Vaughn coming in. They're trying to close deals. Let Bissett come out here and try to work Wall Street and tell things. By the way, it is a little bit crazy that they are telling Wall Street investors beforehand that they're negotiating deals, and then all of a sudden stocks go up. But it looks like they're changing the strategy up, and we'll see. We got to take this one day at a time. I mean, it literally, what we say in the morning can change 2 hours later, and the markets react to any headlines. And I think that's part of the sonar amplification of social media, is that everyone gets their news like this in a second, and the markets react like very instantly, but somebody might not read it until 8 o'clock at night. And so I think the markets are very fidgety. Right. And we see the sharp reaction, both positive and negative now.
Okay. I did want to circle back because you keep saying if the Fed just lowers rates by 1%, if they go into a rate cutting mode, do you think they would do 1% right away? Or are you saying like, 25, 50?
It really depends. Again, same premise as always since 2022. The labor market runs their show. Right, the growth rate of inflation. When we do these events, I show the growth rate of inflation has fallen a lot. Right, global pandemics, very inflationary than the disinflation. But why aren't we sub 6% mortgage rates? Because Fed policy is up here, and they set it purposely for that. The only thing that's ever nudged them was the labor data, and they've told us this. It is amazing to me. I've literally could take all the clips of the Fed president saying, well, if the labor market changed, jobless claims, we track that. Labor market. And it's like people think they're not serious. Yeah, it was always labor over inflation. Paper, rock, scissors. Those are paper, rock, scissors. Come on. Let's one. Right?
Oh, wait. Okay, I do.
You got me. There you go.
All right. Yes, on the rock, paper, scissors, which is the correct way to say that. And I'll get haters for it. Okay, so.
Oh, putting.
Oh, okay. Yes. Okay. Let's finish. And then we do have one important thing to talk about where I found some, normally I'm the one who has no cultural reference. He'll bring up some movie or I have no idea what he's talking about. But this is crazy. Okay. We're going to talk about it now since I just did that. Okay. So we're walking around this beautiful Amelia Island resort where Dark Matter is having where they're having this conference. They have all these things set up and we pass by a miniature golf course. And I say, oh, that's so great. Putt-putt. I haven't played putt-putt in forever. And Logan is like, what did you just say? And I was like, putt-putt golf. And he was like, what is putt-putt golf?
We don't call it putt-putt golf. I've never heard that term.
That's crazy. Mini golf is the same as putt-putt golf.
I've never heard putt-putt.
Okay.
This is a West Coast. This is a Tupac versus Biggie thing. Okay. So
I grew up all over. I mean, not the West Coast, but like everywhere.
Yeah, the West Coast, we don't call it putt-putt. We call it miniature golf.
Okay. So we need our listeners to weigh in. Am I crazy or is Logan crazy? I think it's Logan this time. I mean, mostly it's me on the cultural references, but like who doesn't say putt-putt? Who doesn't say that?
You're an elderly Gen X person. So, it can happen.
Okay, is this a West Coast thing? Is this because I'm old? What is this? Okay, that's one thing. All right, so back to the Fed. Now the important things, right? So if they do like a 25%, 25 BPS, thing lower, does the market take that and run with it?
No, I still think if the Fed says, okay, we're going to be more accommodative if the labor market breaks and the labor market's breaking, the 10-year yield has a little bit more leeway to go. Just for everyone to remember, mortgage rates fell 2% from the peak to the bottom with 0 rate cuts, right? Because, the 10-year yield went up higher, 5%. Fed said we're done hiking. Usually that means a bond market rally. That's what happened in other cycles. But when we got down to 6%, we had 0 rate cuts in there. So you could have mortgage rates move 1% to 2% with nothing going on tied to the economic data. So labor data runs everything. If the labor data gets weaker, plus let's just do a hypothetical. What if labor data gets weaker? We start to do deals and this is all going to end. Okay. Yeah. Then you got a more clear way for the bond market to go lower because we're okay. This whole trade war tap dance created a lot of drama. We need to make sure that the economy doesn't get worse. That makes sense. That is a workable theory, but again, a lot of variables, moving parts. I think that's the confusion with everyone right now.
We just need lower rates. That's it. All right, Logan, thank you so much.
Thank you, Putt.
Weigh in, please, and weigh in my favor. Okay. Thank you. We'll talk again soon, actually even tomorrow.
Pleasure.